The ETF launch is a really big deal. I mean, it allows a huge pool of capital that could not easily buy Bitcoin to now buy Bitcoin. So, I mean, to be honest with you, I'll give you the spread. I mean, to my way of seeing end of calendar 2024, we could be at 100, we could be at 300. I doubt we're below 100. I highly doubt that. That's, from 60, that's a 40% move or a little higher. That should be pretty easy, 50% move. That should be pretty easy from here. To their number of 2025, 250, yeah, that sounds possible. There are a lot of models. There are a lot of ways of looking at it. I look at them all, I weigh them all, and then I'd say, you know what, it's a new thing. I think Michael Saylor said all your models are broken. I think he's kind of right. It would not surprise me at all if it shot up to 250 quickly. But it also wouldn't surprise me if, a year from now we were only at 110.
Lawrence Lepard, seasoned Bitcoin investor and managing partner of Equity Management Associates, had just revealed his bullish outlook for Bitcoin's performance for the years 2024 and 2025. As the expert discusses his potential price targets, he acknowledges the possibility of Bitcoin skyrocketing to around $100,000 to $300,000 within this year. While acknowledging Bitcoin's inherent volatility, he remains bullish, considering even a conservative estimate of no less than $100,000 within a year. Despite short-term fluctuations, Lepard is confident that Bitcoin's value will continue to rise substantially over the next few years. We will now bring you clips of Lawrence Lepard as he shares his latest outlook on Bitcoin and the macroeconomy. While watching, please give this video a thumbs up, subscribe to the channel, and enable post notifications for more similar content. Make sure to stick around until the end of the video, where Lepard discusses why Bitcoin is becoming increasingly important in today's struggling economy. Thanks, and enjoy.
Boy, it's a wild animal and nobody can really know. I mean, long term, I'm highly confident that it will continue to outperform and be much higher. And by that, I mean by the end of this year, next year, the following year. Short term, it could do anything it wants. As you know, it's quite volatile. I think what's going on in Bitcoin is just the knowledge, very much like gold. I mean, and I do consider, gold is 5,000-year-old money. It's the soundest form of money ever until Bitcoin came along. And, it's analog sound money. Bitcoin's digital sound money. And I think that what's going on there is you're just seeing more and more people becoming aware of the fiscal and debt problems that the world has and looking for an escape hatch. Gold's one and Bitcoin's another. Turns out Bitcoin has performed better than gold. So, younger people tend to aggressively go towards Bitcoin. But as you point out, it has been correlated with the NASDAQ. It has been correlated with risk on, and it does tend to have pretty wide swings. And so it's not suited for everybody. There are people who, prefer not to have the volatility and they might, and they're looking for a sound alternative. They might choose gold. In turn, if you're looking for the most rapid growth on a performance basis, Bitcoin has clearly been the better choice for the last 10 or 15 years, and I think it will continue to be a better choice. So, but it's come along too. And to me, as I said, I think earlier, these are both the canaries in the coal mine. The fact that they are both up as big as they are, Bitcoin's up 66% in the quarter. Oh my goodness, that's a big number. Gold was up, 13, 14% in the quarter. That's a good number too. Just annualize those are huge numbers. So something's going on here. The fact they're both up together and the stock market wasn't up that much. Something's going on here. And what I submit is going on is a larger percentage of the world is becoming aware of the monetary problems that are about to emerge because the Fed is trapped. And I think at the end of the day, they can say they're going to go higher, they can say they're going to go lower, they can talk all they want, they can jawbone, they do all kinds of things, they lie about what they're doing. But at the end of the day, if push comes to shove and the choices are do nothing and let the system collapse, or print money and create new programs to accommodate the system and dilute the value of the dollar through debasement, the politicians, they will always choose option two, because as we saw in 08, in 2020, in 2019 with the repo blowout, in March of 2023 with Silicon Valley Bank, they are not going to let the system collapse, full stop. They can't. They just won't do it. But what makes it so hard for all of us is they tend to, in the interim periods, they tend to talk tough and, imply that, oh, they've got it all under control and we're going back to 2% and da-da-da-da. But, again, I think what's going on is gold and Bitcoin are saying bullshit. You know, you guys can say all that stuff. Yeah, we hear you. That's what you're saying for sure. But you know what? Bullshit. We don't believe it. We'll take the gold and Bitcoin. Thank you very much. At the end of the day, the block reward, whether it's 6.25 or 3.125, it's the difference between 900 Bitcoin a day and like 450 Bitcoin. That's not the biggest determinant of demand in my view, of supply and demand in the market. That's a small number compared to the 19 million coins that are out there. It has an impact, and historically, there's always been a price run after a halving, if you look back historically. So I fully expect we will have a price run. But if you actually also look back carefully, you'll see that in some of the prior halvings, it actually went down for a little bit before that price run began. It took a while. There was like a lag effect for the halving to have an effect on the price. And so it's entirely possible to me that would occur again in this particular time frame. As I said, Bitcoin's a wild animal, and you just don't know on any given week, day, month what it's going to do. I mean, it could go to 50, it could go to 80. I mean, I have no idea. I will say this. I will say this though. I have great confidence that in a year or two, it's going to be much higher than it is today.
Before we proceed with more of Lawrence Lepard's insightful ideas and predictions, here's a quick update on the latest news that you might also want to know about. Renowned crypto analyst Rizzo points out an interesting trend. After each halving, Bitcoin tends to add a zero to its value, showcasing significant growth. For instance, in 2012, Bitcoin was priced at $10 during its first halving, while subsequent events in 2016 and 2020 saw BTC trading at $650 and $8,800, respectively. With Bitcoin currently hovering around $63,000 to $64,000, there's growing anticipation that it could surpass $100,000 by the time of the next halving event in 2028. Prominent figures in the crypto space, including Thomas Lee and Mark Yusko, and financial institutions like Standard Chartered and Bernstein, anticipate significant price gains for Bitcoin post-halving. Predictions range from $150,000 to $200,000 by year-end or within the current bull cycle. Renowned financial figures like Robert Kiyosaki and Michael Novogratz also express confidence in Bitcoin's potential, with price targets surpassing $100,000. With that, let us now turn our attention back to Lawrence Lepard, as he shares more of his insights on Bitcoin and the broader macroeconomy.
But Bitcoin's a measure of liquidity, and the NASDAQ is tied to liquidity as well, so it's going to take time for the two to separate. But I do believe over time they will separate. But if they print a lot more money, I mean, my new base case, I've kind of revised this. I used to think we were going to have quite a big market downturn and quite a big recession. I'm actually, and maybe we will, I'll be wrong again. But I'm now, based on what I'm seeing, I'm now kind of starting to think, you know what? We're actually not going to have that big a downturn, that big a recession. We're going to have a pretty hot economy. It's going to be pretty healthy. The stock market could go higher. There'll be a lot of good things happening with one exception. We're going to have serious inflation. Because they're going to have to grease the monetary skids. The velocity is going to pick up, and with those changes, there's no way you get out of this inflationary trap. And so it's entirely possible that the Fed ultimately starts thinking maybe they have to hike rates further. I don't know that they'll do that, but as you pointed out earlier, they've certainly backpedaled from a lot of rate cuts to very few rate cuts based on the strength of the economy. And so the new data that we all have, because we kind of all thought there's got to be a recession coming here, and there hasn't been in a big way yet, right? Who's the sucker at the card table? It's the bondholders, right? I mean, look at the TLT, which is the 20-year bond ETF. I think that thing's down 40 or 50% from its all-time high a few years ago. And sadly, I think it's going to get worse. So, you just, in an inflationary environment, if you go back and look at the 70s, you wanted to own oil, you wanted to own gold because they both benefited from inflation. You did not want to own bonds. Henry Kaufman called them certificates of confiscation. If inflation does what I think it's going to do, the only way bondholders are going to be willing to hold bonds is if the interest rate is higher. Now, I say that, and then I'll add a caveat. And the caveat is, I think at some point the Federal Reserve steps in, realizing that if they let interest rates get too high, everybody and their brother is going to be bankrupt, including the federal government. I mean, the federal government kind of is bankrupt, but it'll be obvious that they're bankrupt. And so what I'm describing, of course, David, is yield curve control. So I think that as inflation starts to become more evident to everybody, the bond yields will start to go up. But I think there's a point at which the Fed will say, we can't allow this to get worse. And so we're going to start buying the bonds. We're going to reinstate QE and start buying the bonds and putting them on our balance sheet. And we're going to fix the interest rate at a certain level, that we're not going to let it go above that level. And that'll lead to a lot of balance sheet growth. That'll lead to a lot of monetary expansion. And of course, it'll make inflation worse. But, you know, that's what they will do, because the alternative would be to let those interest rates go up very, very high and choke everything off, and we would have a big crash. And keep in mind, the politicians are always looking to do, you know, they don't think in 10 and 20-year timeframes what the right move is. They think in terms of what can get me elected next year. You know, who cares what happens after that, right? And so if their choice is have a big collapse and take the pain in order to reset, or kick the can and the inflation's a little bit higher, they always lean on, they'll take the kick the can, but inflation's going to be higher. So that's my prediction that I have a high degree of confidence in, is that we will have higher inflation.
Do you agree with Lawrence Lepard's insights? Do you see Bitcoin surpassing $100,000 by the end of this year? Share your thoughts in the comments section. If you found today's video informative and would like to receive more insights and updates on cryptocurrency and global finance, please consider liking the video, subscribing to our channel, and enabling post notifications. Be sure to stay tuned for our next episode, where we'll uncover more about the fascinating developments in the crypto space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we look forward to seeing you in the next video.